Better.
All right. So talking here, guys, down payment assistance programs. And so we did a webinar a couple weeks back, and we talked about 3% down with Fannie Mae, Freddie Mac, and FHA. We also talked about the MCC programs. And so I wanted to, we talked to a few realtors afterwards, and they were asking about down payment assistance. So I figured what we do is we would cover some down payment assistance stuff with you guys today, answer all your questions. And we're going to be focusing on Broward, Palm Beach, and Miami-Dade County, which is the home of most of the realtors that we do business with. So if you guys have any questions, feel free to ask in the Q&A or in the chat box. And I know that last time Howard was kind of helping me along with the chat box as well. So there's a Q&A box in your control panel as well as chat. You guys can use either one of them. So down payment assistance. So there's different programs available in different counties. And I'm going to hit the high level here, and then we'll go into more detail in just a second for each program individually. And then we're going to finish up talking about marketing and lead generation for you guys and how you can use these to make your phone ring, which at the end of the day is why you guys are all here, right? To learn about the programs. I don't need you guys to be underwriters. I need you guys to be salespeople, right? Go out there and do what you do and know just enough about the programs to be able to have those high-level conversations and then be able to bring in leads and first-time homebuyer leads to your business. So that's what we're going to help you guys do today. So in Broward County, we have a program available called the Own a Home Opportunity Grant Program. And we're going to talk about that in more detail in just a second. In Palm Beach County, you guys are lucky. You have two options available. You have the Own a Home Opportunity Program and the Own a Home Opportunity Grant Program. And those are very different from each other. And we're going to talk about the differences. And then in Miami-Dade County, you have a program that is given to you guys directly through the county, which is the Miami-Dade County Housing Finance Authority. So we're going to dive into the meat and potatoes of these programs and the differences. And again, feel free to let us know as we go through if you have any questions. I will be sure to answer each one for you guys today. First, we're going to talk about the Own a Home Opportunity Grant Program. So this program is available in Broward County. It's also available in Palm Beach County. So for those of you who do business in Broward or Palm Beach, you want to pay very close attention to this information. So you'll see here it's available in the following counties. So it's obviously available in other counties outside of our neck of the woods. So if you do business in any of these counties, then you're in luck as well. There is no first-time home buyer requirement for the grant program, which is awesome. So you just have to follow the guidelines set forth by whatever program they're going through, whether that's FHA, VA, USDA, or conventional. But there is no specific first-time homebuyer requirement, which is awesome for this program.
Hey, Chad,
yep.
Can they own other properties while they're trying to get this money?
They can own other properties. I believe they have to own investment properties. And then, so for example, FHA, when you go to get an FHA loan, it allows you to be able to own other properties. So it's whatever the guy for the grant program only. Now for the other program, it's different, the one we're going to talk about, but for the grant, you are able to own other properties, but this property has to be your primary residence when you purchase it. Does that make sense?
Got it.
And the audio, knock on wood, the audio seems to be holding up on me, so that's good. So like Howard just talked about, primary residence, it does require that we need to be a primary resident buyer, which means you have to occupy that property within 60 days. And I will tell you guys, like from an underwriting perspective, that underwriters are in tune to, especially on these programs, occupancy fraud. So they will be asking all the right questions regarding making sure this is indeed going to be somebody's primary residence when they purchase it. So I just wanted to give you a real high level overview of the credit score requirements for the programs. So for FHA, you need a minimum of a 640. Now a grant program offers different types of assistance. It's either a 4% grant or a 5% grant. And the way that it works is it's 4 or 5% based on the loan amount that they're taking on. not the purchase price. So I just want to make sure that we're clear on that. So for an example, they're getting a $200,000 mortgage and they qualify for 5%, then they're going to get a $10,000 grant. It does not have to be paid back, so that is their money, and they can use it towards down payment assistance as well as closing costs and prepaid expenses. And so, Howard, explain the difference between like something like this versus them getting a seller credit or getting a credit from us as a lender credit.
So when sellers give credits or any interested party gives a credit to a buyer, it normally can only go toward closing costs and the prepaid expenses like insurance and setting up an escrow account. The good thing about this down payment assistance is that you can use this toward closing costs. You can use it toward buying insurance, setting up escrows, but it could also cut into the down payment. So you could combine this with seller credits, and between the seller credits and this down payment assistance, people can get in for virtually no money down or very little money. So, it's for those people who just don't have the cash, but they have the decent credit and they have the income to be able to qualify.
Right, and we've had some instances, especially in Palm Beach County, where the seller's picking the title company and paying for the title insurance, where on the lower purchase price properties, it's covering almost everything. So, and you can also get you can also get a seller credit in conjunction with this. It doesn't mean you can't get a seller credit. It just means that, like Howard explained, that you can use this money towards the down payment. The borrower is either 3% down or 3.5% down, whichever program they're going through, or 0% down if they're going VA or USDA. So obviously you can see in instances where they're getting a VA loan where they absolutely would not need any of their own money because there's no down payment requirement. So very, very cool programs. And again, they're grant programs, so you do not have to pay the money back. There are conventional options as well as FH or government options, which is a great thing. So if your buyer is in the market for, say, a condo or something like that, then the conventional programs are still available for them. They do require a 640 credit score for the conventional programs. And again, like I said, 640 up and up for the government. If you're doing an FHA and have it between a 640 and a 659, it will limit the amount of the grant. So as you can see in front of you, it's only 4% if you are between 640 and 659, and it's a full 5% grant if you have a 660 plus on FHA. So I want to bring that to you guys' attention. Here's another really big thing that this program allows that the other down payment assistance programs does not. So here's where it's unique, is this program, not only does it not have to be a first-time home buyer, but we only use what's called 1003 income. So let me explain that. It's borrower application income. And if you remember, if you joined us for our webinar a couple weeks ago when we discussed mortgage credit certificate, or the MCC, that's the $2,000 a year credit that we're able to get buyers. Now, with those programs and with most other down payment assistance, the programs are going to look at household income, right? So that's if you're a married joint, right, husband, wife, they're going to count both incomes, even if both spouses are not actually borrowers on the loan. It's a big difference. Also, if you have anybody else living in the property with you over the age of 18 who's working, they're going to count that income. So it's very easy in those other instances where your income might exceed the allowable, so you wouldn't be able to take advantage of those programs, whereas this program is only the applicant income. So let me give you an example of where this would be a great benefit. You have a husband and wife. Let's say the wife earns $70,000 a year. The husband happens to earn $40,000 a year. So together, their income would be more than what would be allowed for the program. But if the wife can qualify with her debt to income ratio on her own for this property, then they would be able to get the grant, even though together they make $110,000. So that is a very unique thing about this program, which is why we love it so much, is because we were able to kind of tailor it and see if somebody can qualify on their own and still be able to get a family who normally wouldn't be eligible for assistance. They can still get assistance. So that's a big deal. Anything else you want to add in there, Howard?
No, but it's a great point that using that 1003 income, because there's a number of other programs out there that if it's a husband and wife and they don't even live together anymore, they're separated, you still have to count both their incomes. And this is just what we use for qualifying, so it's very black and white.
So, and Caesar had a question about the income limits for the program. I'm actually going to cover that in just a second. I'm going to have a slide which will show you guys the income limits for each for the counties. So I'll get to that in just a second, Caesar. But I wanted to just let you know I saw your question there, so thank you. Lastly, this can be combined with the $2,000 per year mortgage credit certificate that we talked about a couple weeks ago. And for those of you, if you don't know what the MCC is, or the mortgage credit certificate, if this is the first time you guys are hearing about this, do me a quick favor and just put a little note in either the chat box or the Q&A, just saying you haven't heard about it, and we can reach out to you individually and discuss it in further detail, because there's a lot that goes into it. But on a very high level, basically the borrower gets $2,000 per year of mortgage interest, essentially refunded to them dollar for dollar. And you can combine those two programs now. So you can have your cake and eat it too. You can have the down payment assistance, and you can have the $2,000 per year tax credit. It's a slam dunk. So you can get one without the other, because you might have somebody who qualifies for the grant and not for the mortgage credit certificate, again, because the incomes are calculated different for the households, and one has to be a first-time home buyer, one doesn't. So you don't have to use them together, but there are instances where you'll qualify for both, and then you are going to look like the hero with your clients for turning them on to us and to these programs. Because imagine them coming to you not knowing about any of this stuff, and now all of a sudden they leave with $10,000, $15,000 in assistance and $60,000 over the life of their loan in a credit certificate. So you will definitely be on their Christmas card list going forward. So that's pretty much it for the grant program. I'm going to show you a couple other slides here and the reason I put these slides in is so that when you guys get a copy of the presentation afterwards, you'll be able to reference back to this PDF and know, again, the FICO scores that are available. Here are the interest rates that are being offered right now on the program. Those change. Obviously, one just changed on the 18th of August, the other in July. And it also shows for each credit score in each program how much assistance they qualify for. So I'm not going to run through and talk about each one individually, but I wanted you guys to have a copy of this in your presentation to reference back to at a later point. And Caesar also had a question on the household income limits. Here they are. In Broward County, you're looking at $96,150, which is pretty generous. And in Palm Beach County, it's six figures. It's $101,850. So, and guys, remember, we can separate borrowers. So imagine you have one borrower in Palm Beach earning 100K and the other spouse earning 75. And meanwhile, so they have a household income of almost 200,000, and they still qualify for down payment assistance. It's pretty crazy, because again, we can separate those borrowers out and have just one apply for the loan, but they still can both be on the title of the property, obviously being married and buying together. We have a couple questions here. Are you still allowed to charge the buyer a real estate company transaction fee? Yes, you can. You are allowed to do that. Let's see. Just to make sure I'm getting to all your guys' questions. Yeah, the interest rate was 5% on that one program. Again, the interest rates are a little bit lower. So we want you. Here's the thing. We want you guys to be knowledgeable of what's available out there. So are there other options better than 5% interest rate? Absolutely. We can definitely do loans with substantially better interest rates on an FHA or a VA loan for a borrower than 5%. However, this could be the difference between a buyer being able to buy a property and them not be able to buy a property. So if you have a buyer that just does not have 3.5% to put down on FHA, or just does not have 3% down on conventional, and their only other option is renting, we've seen it time and time again. The borrower would absolutely take a rate of 5%, because at the end of the day, and here's the real cool part about it when it comes to sales, and it comes to really satisfying what buyers are looking for. Buyers ask about rate, but they really don't care so much about the rate. They really care about what's their payment. Because think about it, like at the end of the day, like when you get a car, do you really, I mean, like, are you paying more attention to what the interest rate is on your loan or the payment? So normally what happens, like when you're buying a car, right, the guy's coming out to you 15 times and giving you, well, how about this payment? How about that payment? And more often than not, we're not really focusing on, well, what's my rate? We're more focused on getting to the payment we want for that car. And home buyers are really the same way. Now, obviously, we want to give them the best rate possible, but if we can get them into the home that they want to be in, whereas otherwise they couldn't, and they're comfortable with the payment and it's below their budget, and then they can reach, because all they really care about, guys, is payment and cash to close, right? Do I have enough money to afford to buy this home up front, and can I afford this payment on a monthly basis? If we can check both those boxes for your clients, then we're hitting we're hitting a home run. And that's what this program allows us to do. And these are good talking points for you guys to be able to have these conversations with your buyers out there, to really be able to reel them in, and again, and also help overcome that objection if they do have one about the rate. Hey guys, there's rates that are substantially lower, but it's either, do you want to rent for another year or two and save up that that additional $15,000, or do you want to get into a home today, lock into the interest rates today, because 5% might be a little bit high right now as opposed to other programs, but it might not be high in a year or two from now relative to all the other programs. Plus they got into the home, they get the tax benefit, and they're locked into that purchase price versus if homes keep appreciating. So a lot of benefits there. But I really appreciate the question, Enid, because it allows me to discuss a little bit more in detail about how we kind of have those conversations with our buyers, and not just focus on rate, but focus on really what's most important is the monthly payment. Let's see if we have any more questions. Howard, so another question we have is, what's the waiting period for this program if a buyer did a short sale or foreclosure? Howard, can you talk a little bit about the waiting periods for like FHA and conventional for after foreclosure?
Sure. These programs go by the regular FHA guidelines or the regular conventional guidelines. So for FHA, if you had a short sale or foreclosure, there's a 3-year waiting period. That is from the date that they sold the property on the courthouse steps, or the date that they actually sold the property. The only caveat to that is if their previous mortgage was an FHA mortgage, then you have to wait until FHA paid that claim. That could be months or even a year after they actually went into foreclosure. So for anything other than FHA, when you're getting a new FHA loan, it's 3 years from the sale date. If they had a previous FHA, then we have to look at when FHA paid the claim. The deed in lieu is the same. And then, so it's just regular FHA guidelines. Conventional guidelines are 7 years unless the property was included in a bankruptcy. And then it's the 4-year waiting period from the bankruptcy date. If you had a bankruptcy, it's a 2-year waiting period from the date of the discharge. So these don't differ at all from the regular guidelines. And with all the guidelines, as far as how we calculate income and credit, and they have to get an automated underwriting approval, just like any loan would, whether you're using the down payment assistance or not.
Thank you. And then, so deed in lieu, we had another question. Deed in lieu, that would follow the same guidelines as foreclosure, right?
Yeah, and with the condominiums, the conventional we can do with the condominiums. There are very few FHA approved condos out there, so you're really not going to see much of that. We also have our own internal approved condominium list that we've done full reviews on, and we could give you that list for those condos, because you could do these conventional loans with 3% down or using the down payment assistance in those condominiums.
And what we'll do at the end is in our closed Facebook group that I'm going to tell you guys about, we'll drop that entire list of approved condos in that group, so you guys have access to it. And in any one of those condos in there, You could do 3% down financing, and we already have the condos approved, so you don't have to worry about that. Like Howard said, you don't have to worry about getting the condo approved.
Now, with the condo approval, there are expiration dates because they're good for 6 months. But even if a condo is the approval is expiring, unless something strange has happened with that condo, it's usually pretty easy to get them approved again. They'll go through the same process, but we already know the background of them, so it should get approved again.
And then another question. We're gonna give you guys the closed Facebook group at the end here, so I'll give you guys the exact link and how to access it, so you guys can get into all that information. And we're gonna continue the conversation heavily in there regarding marketing. So we're gonna give you guys some high-level nuggets here, but in that closed Facebook group, it'll give us a better opportunity to talk one-on-one with you guys and help you guys with your marketing, your social media marketing, as it relates to these different programs. And Howard and I will be sharing a lot of nuggets in there. So we definitely want you guys to be able to join in that group, because we'll give you guys a ton of content. And all you got to do is basically cut and paste, share it out in your social media channels, and you're ready to rock and roll. So keep the questions coming, guys. We love the engagement. All right. So here's one thing. Lastly, is the acquisition limits, the purchase price limits for the programs. We don't really see this being an issue most of the time, because normally the income limit and the debt ratio limits that the program has will keep the purchase price limits from being hit. However, I just wanted you guys to have the information so you guys can see here the max purchase price of the homes in each county that are available for the program. So $317,000 and change for Broward and Palm Beach. So it's pretty favorable. Definitely in that first-time home buyer price range for sure. So, all right, guys. So moving on. So the names are very similar, but the programs are very different. So this one is called Own a Home Opportunity Program. The other one was called Own a Home Opportunity Grant Program. I wish they would have named it something a little bit better to where you could differentiate the two, but so be it, right? So here's the Own a Home Opportunity Program. It's available in Palm Beach County. And luckily in Palm Beach County, you guys are the only ones that qualify for the full $10,000 in assistance. All the other counties mentioned here, Lee, Charlotte, Collier, DeSoto, Sarasota, they all get $7,500. You guys won the lottery and get $10,000. So this is a straight $10K, right? So whereas the grant program was a percentage of the loan amount, whether it be 4 or 5%, depending on what they qualify for, and does not have to be repaid. This program is a $10,000 straight down payment assistance. It's a second mortgage, right? It's a 0% second mortgage. So they never make a payment on that, and there's never any interest charged on it. So essentially it's like me letting you borrow $10,000 to buy a home, and then me saying, hey, look, when you pay off this property, or when you sell this property or refinance the home, or whatever it is, whenever you do something with that mortgage, just give me my $10K back, and we'll call it square, right? That's essentially what this program is. It's basically $10K, here you go, buy your home, and then just pay me back the $10K. It's a second lien on the property. Pay it back to me when you're done. This program, here's a few differences. It is for first-time home buyers. So whereas the grant program, you can own other property, this one is for first-time home buyers. It does have to be a principal residence, obviously, right? You have to be a first-time home buyer. And like I said, it is a 0% second mortgage. There's 3 times where you have to pay the 10 grand back. When you either sell the property, when you pay off the mortgage, or when you refinance that first mortgage. All right, so you will always have to pay it back. There's no instance where it's forgiven. Just want to make sure we're clear on that. Just like the other program, you can use this towards down payment and or closing cost and prepaids, wherever the money you need to, wherever it fits best. You just can't get cash back at closing. So let's say, for instance, you get the $10,000, you do a VA loan, and you happen to have like the best realtor, and they got you a 6% seller credit, and so you don't need any money, right? You can't get any portion of the $10,000 back as a check. You got to use it all towards the transaction. So in that instance, you would actually just use it towards the down payment, even though you don't have one required. You'd pay the loan down. And instead of paying whatever interest rate is, you get it at 0%, because for that $10,000, you're borrowing it without a payment, without interest. These are the government programs that are allowed here: FHA, VA, USDA. The credit scores that are required are here: 660, 640, 660 for FHA, 640 for VA, USDA, and conventional requires a 640. This is household income, right? So this is the full enchilada of everyone that's living in that home, who's going to be living in that home, who works over the age of 18, is going to be considered when we're calculating the income of what's allowed for that program. So this absolutely is more restrictive as a program than the other. I think we covered all that. And you can also use this in combination with the $2,000 tax credit. Okay, so this is, you're able to combine these again. So you can have your cake and eat it too. $10,000 up front, $2,000 every year for the life of your mortgage. Can't beat that. Howard, anything else you want to add on any of these bullets that we just covered?
Just to be clear, a first-time home buyer is somebody who hasn't owned their primary residence in the last 3 years. Absolutely. So if you had a house over 3 years ago, or like you were one of those unfortunate people who fell into foreclosure and then you're waiting the 3-year waiting period for FHA, you'll then be considered a first-time home buyer and you can use this program. So it doesn't mean that you just haven't ever owned a house. It's 3 years.
Thank you. Appreciate that. And Laura asked about the flyers. Absolutely, Laura. We're going to show you the flyers in this presentation, and we're going to email you guys out flyers that you'll be able to use, whether it's emailing it to your database or posting on social media. So you guys will have your flyers for the MCC program, the grant program, as well as the down payment assistance, 10,000. So I'm going to give you flyers on all three of those.
And just also wanted to add that with this program and with the other grant program, we don't set rates or fees or anything. The program has set fees and set rates. So like what we could do with when we give lender credits or we're doing regular programs, we don't have that flexibility in this. They set it, we just go with what it is and live and move forward.
Right, which is why we're not allowed to give lender credits along with these, because it is what it is, and if you're signed up and qualified to be able to offer these programs to the public like we are, then if you're an approved lender, they give you a menu. Here's what you can offer, and that's it. So, but there's not a lot of lenders that are able to offer this because, quite frankly, you got to run the gauntlet with them, and you have to have underwriters all get certified. All the processors have to be certified, and every salesperson who offers it has to be certified. So it's kind of a pain in the butt to go through, and most lenders don't want to go through that. And even if loan officers want to go through it, if corporate doesn't want to go through it and put their underwriters and processors through it, then you're kind of out of luck.
And I just wanted to add, Chad, that whenever we have, whenever we're referred a customer, we look at every program that's available. There are customers that these down payment assistance or grant programs are not the best option for them. They're better off going in another direction just because it's just less money for them, either out of pocket or they get better interest rates or, for one reason or another. So, in talking to people, we don't just say, okay, they want down payment assistance, here it is. We're going to analyze their full situation so that we give them what's best for them, whether it's they're looking for the lowest payment or the least amount of money to move into a house.
That's a great point. The other thing is that, we do all this stuff in-house. So, we're a direct lender. We underwrite all of our own loans. So all these programs, there's no red tape on them. There's no delays in the processing time periods. A lot of the questions we get is, how long is this going to take? It's standard time frame for a purchase, 30 days. So you don't have to mention anything about this on the contract, right? This is not like one of those city or ship programs where we got to deliver a whole file to them and then, we keep our fingers crossed and hope that 90 days from now it's going to come to fruition. No seller wants to wait for that, right? So you guys don't even have to mention any of this. The assistance comes on as part of the loan. So when you're drawing up your contracts, it's just a regular conventional VA or FHA loan and you're done. So you're not going to put anything in the contract that is going to sway the seller or the listing agent from not wanting to do business with your buyer. Because at the end of the day, you got to get your offer accepted, right? That's first and foremost with anybody. So we do everything in-house, and we really hold the borrower's hand through this entire process. So We help them fill out their application forms, and really all they have to do is sign, and we register them for the first-time homebuyer online course, and we do all that for them. So we really, give them white glove service with these programs, where I've seen other people that participate in these kind of, give the borrower their 13-page application package and say, hey, fill this out and send it back to me, and go find a first-time homebuyer class. And, obviously you guys that have worked with us know that we don't do it that way. We don't operate that way. So we want to make sure that we give that white glove service from beginning to end, because we want to make the process as simple and easy as we can for our buyers. Another question here. The local county program has to approve the home condition. This is not the case with the grant of down payment assistance. Yeah, that's correct. Yeah, this program doesn't have any, no local authority has to come out and take a look at the property. I mean, they're going to, just the same as any other FHA or conventional loan, they're going to look at the appraisal, see what notes the appraiser gives, and call it a day. So it's the same guidelines as any regular loan you're doing. So there's not going to be a second set of eyes going out and inspecting the property. Again, no red tape. This is like, fly right through. Let's see what else. All right, cool. Just trying to make sure I get all your guys' questions answered. Let's see. Here, just like I showed you on the other program, here's a little screenshot for you guys to have as a reference point with all the different FICO scores that are required and the effective interest rates as of today. So you can see on these programs, the interest rates are much lower than on the grant program. And I guess that would be a direct parallel to, you got to pay this money back, whereas the grant program, they get that money and it's theirs. So because this program has to be repaid, the interest rates are significantly lower, which causes a lower payment for the borrower. So, but this is a little bit harder to qualify because of the income restrictions and first-time homebuyer restrictions. Here are the household income limits. Again, remember, these are household, right? Whereas the other one was 1003 applicant income. So here's the household income. And it also is based on household size. So if you're like a 1 and 2 person household versus if you have dependents that live with you, you're given additional leeway there with income if you have a 3 person plus household size. And lastly, here's the acquisition limits for properties that are eligible for the Own a Home Opportunity Program. Howard, any last thing you want to add before we jump into the Miami-Dade one?
No, and just in a rare case that you find properties in the targeted areas, they increase the income limits and the amount of the acquisition. But these are mostly in lower income areas, and we don't see a lot of them. So if you see that targeted, that's what that means.
Yeah, those are yeah, again, like, they're hard to find. I mean, they're not a lot of targeted areas, but we do check the property addresses to make sure to see if they happen to fall into those areas. And last but not least, and then we're going to jump into some more marketing stuff as well as the closed Facebook group. So stick around for that as well, and the flyers. But here's the Miami-Dade. So if you happen to do any business in Miami-Dade, it's similar to the Own a Home Opportunity Program. So it's similar to the $10,000, which is a 0% second mortgage, except Miami-Dade is offering $15,000. And the funding is coming directly from the county of Miami-Dade. So they're giving a little bit more in assistance. So the guidelines are pretty much the same, so I'm going to kind of run through them a little bit faster. So first-time homebuyer, again, they do have to be first-time homebuyers. Primary residence, up to $15,000 in assistance. 0% second mortgage. They do have to pay it back. Same guidelines when they either sell, refinance, or pay off the home. Funds can be used towards a down payment and or closing cost and prepaid expenses. We do also use household income for this program. This program does charge a 1% origination fee. As a fee it's charged by the county. So they do have to pay the 1% as a closing cost. They only pay it at closing, so obviously if they don't qualify for the program or they don't close, there's no fee to apply for it or to see if they qualify for it. And just like the other program, cash back is not permitted. One thing I forgot to add onto this slide is you can also use this in conjunction with the $2,000 a year tax credit. So again, $15,000 plus $2,000 every year for the life of the loan when it comes to the first-time homebuyer tax credit program. So some very good funding here, 15,000. So that's one of the higher ones I've seen. Howard, anything you want to add in there?
No, it's like Chad said, this is very much like the $10,000 down payment assistance. It's just $15,000, and of course it's limited to Dade County. And
this one shows the same thing, little snapshot. Here's the credit score requirements for the program. A little higher on the government, 660, conventional 640, and you get $15,000 in assistance, no matter which way you go, whether it's conventional or FHA, USDA, VA. So I wanted to show you those. Here's the income limits for the 1 and 2 person household, as well as the 3 person plus, and right below that are the acquisition limits for Miami-Dade County. Again, you'll see the 1 and 2 person, you'll see the 3 plus, and you also see the targeted areas, which we again, we check on each property when we get the addresses. We'll see if they fall into those targeted areas. I don't see any other questions, so it looks like we're doing good there. Here are some of the flyers that we're going to give you, and it's smaller on the presentation, obviously, than we're going to give you the full-on flyer. So it's normal letter size flyer. Great to use on social media. We'll give you guys a copy of the PDF version as well as a JPEG. JPEG works great when you're putting stuff like on Instagram and Facebook, so it can show right up there like as a picture. And it works really well to get people's attention when you put that out there. So this one here is for the mortgage credit certificate along with the grant, the 5% grant. So that's what this first flyer is. The second flyer, this is for the 0% second mortgage flyer. So here up to 15,000, obviously just from joining us today, that's for Miami-Dade. But I put up to 15,000, so that way you can use this flyer, whether you're marketing to Palm Beach County or Miami-Dade County, you can use the flyer. Just know that in Palm Beach, it's going to be 10. In Miami-Dade, you're going to get 15. And in all the other counties that are listed on here, you're going to get the 7,500. But we'll have those conversations with the buyers, obviously, and know what they qualify for. So this is the flyer for the 15. Let me see here. I do have another question. There's a question regarding targeted areas. So targeted areas are basically areas that are zoned for revitalization. So when I send you guys the email following this presentation today, I'll include a link to where you can go and look up the what's called geocodes. 99% of you guys will never use it, but I can give it to you guys just to say I gave it to you. But again, we look it up for you. All it really means is it falls into an area of revitalization, and we plug the address into the property. It gives us like a census tract code, and then we go to the guidelines for each program. And if that census tract code is one of the ones listed under the target areas, then that home qualifies for that. So then the income limits are higher and the purchase price limits are higher if they happen to fall into that. Just because the home falls into the target area doesn't mean that you automatically qualify for the down payment assistance. You still have to qualify based on those parameters. Any other questions regarding anything that we've covered? On a duplex, I don't think any of these you can use. They all have to be 1-unit properties. Now you can do multifamily, like if you're doing a regular conventional loan or an FHA loan, but for these particular down payment assistance programs, it's 1-unit properties. So you can't use them on multifamily. And let me show you guys here. If you have anybody that's interested in working with these programs or just in general, we have 2 predominant ways to reach out to us. Number one, have them call us on the pre-qualification hotline. That rings to me and Howard. It also rings to our sales manager, Anthony, as well as our salespeople. So that way it gives us the best opportunity to make sure that call's answered each and every time. So if you give that number a call, it's like a hot potato. I mean, that phone's ringing throughout the entire office. So that way we can ensure it gets answered. The preferred method is to email us. And the reason why is because a lot of times what happens is like you guys say here, give Chad or Howard a call, and we don't know to be expecting a call, and the buyers don't necessarily have the same sense of urgency that we do to jump on these, right? So it's a simple question to ask the buyer to get their buy-in and their commitment to letting us call them. Is just say, hey, I got a great mortgage team that works with these programs and that we want to refer you to. Is it okay if I have them reach out to you and give you a call and start the process? Instead of just emailing them our information, just ask them if it's okay and then email us their information. That way, you know that we got that referral, and then we can follow back up with you because we know that A, we got a referral, so we know who to follow back up to, and then B, we can follow up immediately and jump within 5 minutes. We're going to be on the phone with that buyer. So it works way better if you email this to us, and then this comes directly again to me and Howard, as well as Anthony, so that we can make sure that whoever can call first and jump on this for you guys, that's who's going to do it. If you have a preferred loan officer on our team, then by all means, request that we have that loan officer get that lead, because we want to make sure that you guys have those relationships that you're working with and that you're happy with. So we don't want to get in the middle of that. So this is the best way, pq@closewithus.com. Make sure you guys program that into your email so that it just pops up. That's for pre-qual. Lastly, if you haven't already joined our closed Facebook group, this is where you go do it. This is where we're going to be sharing a lot of the marketing tips and tricks, and we're going to be diving a lot more into organic social media marketing with you guys, and ways for you guys to use your social networks to engage with prospective buyers and past customers to be able to get more referrals and lead generation out of there. So we have a lot of knowledge to share with you regarding that, but we're going to do it in there because we don't want to do it just out in Facebook. And not that we're going to say anything that's going to be shady or that's wrong, but we want to make sure that the information that we give is to the right audience. So, for example, if we share this information on our main Facebook page, then we have home buyers on there. We have people that are working with us as prospective home buyers. They don't need to hear about lead generation for realtors, right? But you guys do. So this is where we have a closed forum. We have I think close to 100 realtors in here now, so that you guys can talk amongst yourself. It's a great group of peers for you guys to bounce ideas off of if you're struggling with something. If you have questions regarding what CRM do I use, how do I email my clients, how are you guys overcoming this objection? This is a great place to talk to a group of your peers and find out. That way you're not on an island, and find out what others are doing to be successful in certain areas. So you definitely want to use this as a jumping off point to ask questions. So make sure you head over there right away. It's facebook.com/groups/Agent Unleashed. And all you got to do is request access. We'll grant you guys access as long as you're a realtor and as long as you're a part of our network here. And make sure that you guys get all the information there. And we're also going to go ahead and drop in the flyers in there as well. And like I said before, the list of approved condos. So you guys will know which condos are already a done deal when it comes to 3% down conventional financing. So you guys can use those there. I do have a few last questions I want to check on here. Just to make sure, can you give a lender credit? We cannot give a lender credit in conjunction with the down payment assistance or grant program. Just want to make sure that we're clear on that. We can if we do a regular FHA or conventional program. If we're just doing the $2,000 tax credit, then we can give a lender credit. But if we're using the down payment assistance from the counties, we cannot give a lender credit. What's the highest lender credit you can offer on a regular conventional or FHA loan? That really comes down to each individual buyer. Howard, explain how that works a little bit more. Like, so if we're going to give a lender credit on an FHA or conventional, explain the differences on those.
So on the conventional files, the rates are set by the down payment and by the credit score of the borrower. For borrowers with higher credit scores, even with the lower down payments, we can give pretty decent credits because of the way the pricing is set up. So as you increase rate, we as a lender get a premium on the paid to us. And as the rate goes up, we can use part of that premium to give back to the buyers to offset closing costs or prepaid expenses. Can't use it for the down payment. So we've done credits up to 3, 4, 5%, depending on the borrower and depending on the situation. And with FHA, the credits are, it's funny, the FHA, the pricing rates are a little bit better for FHA and not as sensitive when it comes to the credit scores, but the credits are a little bit smaller. So usually it's around 3%. But again, depending on the customer and the situation, it matters how the pricing lays out for the size of the credit that we can give them. I hope that answered the question. It was a little wishy-washy, but it's not a 1 + 1 = 2 answer.
Never is. So I think actually, so Caesar's like, it sounds like you're at the beach. The AC vent is literally like right above my desk, and I think it's blowing. And so the microphones that Howard and I have are like really good mics, like for podcasting and stuff, and it picks up everything. And I think it's picking up but hey, we're moving in a week. So, or less than a week. So, and maybe we'll see how the new office is with the AC vent if it's not like right up my desk. And I think that's what is actually picking up the wind blowing out of the out of the AC. I wish I was at the beach. If I was, you'd have a lot better view of my webcam. But I think we're good here, guys. Listen, I really appreciate it. I'm sorry up front for the audio issues. I'm glad that we were able to kind of get this in and go over all this with you guys. And I'm glad everybody stuck around for everything in spite of the technical difficulties up front. So we're going to be having another webinar next week. So we look forward to you guys joining us. And then also make sure you guys jump in there, Agent Unleashed. And we look forward to working with each of you guys individually with your clients as it pertains to these programs. And on behalf of myself, Mr. Vernick, we appreciate you guys joining us today and have a fantastic rest of your Tuesday.
Yep. Thank you, guys. Appreciate you coming.
Thanks, guys.